And if you look just in the last 3 to 4 years, it's been pushing up lately against the $28 to $30 level. It hit that for the first time in mid-2020 in the COVID pandemic. It did that again in early 2021 when we had the silver squeeze. We're pushing up against those levels again now, and that hopefully the third time is the charm. I think that once we get across the $28 to say $30 level, certainly round numbers are psychologically important. I think once we get above 30, that's going to become very quickly a new floor in the silver price, and certainly very, very helpful to miners and explorers' bottom line.
PeterKrauth's analysis of silver's technical breakout highlights its potential significance, especially considering its long-term trend dating back to the 1980 high. The repeated challenges to the $28 to $30 level and the potential establishment of a new floor above $30 could signal a notable turning point for silver prices. With silver nearing 2021 highs, there's anticipation for a potential breakout above the $30 level, particularly considering an inverted head and shoulders pattern targeting higher prices. Heightened geopolitical risk in the Middle East and persistent inflation concerns contributed to silver's recent ascent. However, a correction followed the strong rally in May as bullish traders unwound their long positions. Krauth also points to increasing demand for silver in solar panel manufacturing, especially in countries like China and India, as a key driver of future growth. The forecasted rise in solar panel production and technological advancements requiring more silver per panel suggests a reversal of the previous trend of thrifting in silver usage. In 2023, Chinese silver industrial demand surged by 44% to 261.2 million ounces, primarily driven by growth in green applications like photovoltaic panels. China's rapid expansion of PV production, which accounted for over 90% of global panel shipments last year, further underscores the growing demand for silver. Moreover, Indian silver demand is experiencing a significant surge, with imports skyrocketing by 260% in February, reaching a record high of 2,295 tons. This surge in Indian silver buying could potentially support global price trading, which will be near its highest levels in 3 years. Join us as we delve into PeterKrauth's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
Now let's talk about silver. There's been a clear breakout, technical breakout. If you draw a line from this is not inflation adjusted, obviously, but the 1980 high all the way down to recent levels, silver has clearly broken out from that downward trend line. And if you look just in the last 3 to 4 years, it's been pushing up lately against the $28 to $30 level. It hit that for the first time in mid-2020 in the COVID pandemic. It did that again in early 2021 when we had the silver squeeze. We're pushing up against those levels again now, and that hopefully the third time is the charm. I think that once we get across the $28 to say $30 level, certainly round numbers are psychologically important. I think once we get above 30, that's going to become very quickly a new floor in the silver price, and certainly very, very helpful to miners and explorers' bottom line. This is from Bank of America Global Research. They forecast that demand, right now, it's about 20% of all the silver supplied every year goes to solar alone, the single largest application for silver. They expect that within the next 3 years, it could reach 35% of all silver supply will actually go to just this one application. And there's a lot of talk, obviously, about China. China controls about 80%, perhaps more, of the world's global manufacturing capacity in solar panels. But India is starting to catch up and really becoming an important market. This shows the growth in India in solar panel manufacturing. Their capacity is expected to triple between 2023 and 2027. Really, really aggressive growth. I think that we've started to see that silver flow into India. In February of this year, 71 million ounces in 1 month alone were imported into India. That represents 2/3 of all of their last year's imports. So chances are some of that's going to this new solar park. And given the growth that is expected in India, we're going to see a lot more of this. It's forecast by the International Energy Agency that India is going to see the largest requirements, largest energy demand growth of any country over the next 30 years. So as I say, you know, obviously a lot of eyes are on China for solar, for renewable energy, for energy period, but India's not far behind and certainly growing very quickly. And, you know, there's something called thrifting in solar panels, and that is the amount of silver that goes into each panel. We haven't had any recent data on this. It's been trending downwards, so the manufacturers of solar panels have seen the requirement of silver in each panel drop pretty steadily over the last few years. I suspect the next time we get some concrete data on this, we're going to start to see that trend up, and this is the reason. The most recent technology in solar panels is something called PERC. And that's actually being phased out. So now we've got something called TOPCon, which takes up to 50% more silver per panel. And Bank of America forecasts that by 2026, or is that, 2026, they think that it should be about 50% already of solar panels this year are going to have this new technology. And they forecast that by 2026, it's already going to represent 90%. So this takes more silver per panel. So the amount of silver, that's why I'm saying the thrifting is going to have to go into reverse, and the amount of silver going into each panel is going to start to trend upwards.
PeterKrauth's analysis of the silver market's supply-demand dynamics is comprehensive and compelling. He emphasizes the persistent deficit, which has consistently driven prices higher over time. His data, including forecasts for mine supply and demand, underscores the ongoing imbalance between supply and demand. According to the Silver Institute, silver is expected to remain supported by record industrial usage and a supply deficit despite a solid start to the year. Over the 3 years from 2021 to 2023, there has been a cumulative deficit of 474 million ounces, highlighting the structural imbalance in the silver market. This imbalance is expected to persist beyond 2024, as the Silver Institute citing Metals Focus indicates, primarily due to significant and expanding industrial demand for silver. Krauth highlights the widening gap between forecasted and actual supply-demand figures in the silver market, indicating structural imbalances. Industrial solid demand, notably from the solar sector, surpasses mine production, tightening the supply-demand balance and boosting prices. Let's get back to the interview.
So, the Silver Survey expects that silver mine supply is going to be down again this year, and that's despite considerable growth in demand. Once again, this chart I had back in March, and I thought it was worth repeating. I've updated it a little bit, but really hits home if you think about how silver forecast, a supply forecast, was expected to be up last year by 2%. It was actually down 1%. Industrial demand was expected to be up 5%. It was revised at 14%. Solar, here's the big one. Solar was forecast to grow by 28%. It grew 64% last year alone. And the supply deficit was supposed to be 142 million ounces. It actually turned out to be 184 million ounces. So the deficits are continuing. The forecasts are for deficits to continue well into the future. There were several charts where I looked at why the silver price looked like it was capped if there was so much demand and this structural deficit. And my theory was that the big industrial consumers were getting it somewhere, and that they were getting it probably from the futures markets that have inventories, from the ETFs that have inventories. And you can see those charts, those inventories have been dropping by about 40% in the last 3 years. Some of the registered inventories, which is actually what's available for delivery, have been dropping by 70%. So that's most likely where the silver has been coming from. This is a bit of an anomaly, apparently, that started to tick up. I think, if anything, this is investment demand probably in the last couple of months. So globally, silver ETFs have seen their holdings. I've seen other numbers that are a little bit different, so take it with a grain of salt. So really, are you positioned for this silver breakout? I'm going to have to step it up a little bit here. Silver stocks are outpacing gold stocks. So this is the SIL to GDX ratio. Yes, SIL to GDX. So you've got a triple bottom, which is like a reverse head and shoulders. The neckline shows a clear breakout recently. So that's really interesting. That's good for both silver and gold stocks, but it's certainly very bullish for silver stocks. Then you look at the SILJ to GDXJ, so the juniors, mostly juniors. We've got a double bottom, and we've got a near breakout. So this is going to be very telling. I think that we could probably see this in the next few months. Silver stocks have really been outperforming silver. Silver since late February is up 20%, SIL up 40s, SILJ up 44%, outpacing gold stocks, GDX up 32, GDXJ up 34. So the silver stocks have done even better. And some explorers have been just exploding. One in the portfolio is up 167% since then. One is up 67, one is up 72. And these are still arguably very cheap. So lots of room to move. This looks back to 2016, the SILJ to silver ratio. In 2016, silver juniors absolutely exploded versus silver. It looks like we may have formed another bottom just recently. If we did, and we get a similar kind of move, then you could be looking at tremendous returns in silver juniors. And this is what that looked like back in 2016. So silver was up 40% in about 7 months. Silver medium to larger cap companies were up 240%. Silver juniors were up 340%. So more than 8 times the leverage on silver in early 2016.
With silver nearing previous highs and factors like geopolitical risks and industrial demand driving its ascent, investors are closely monitoring its potential breakout above $30. What factors do you think are currently influencing silver prices, and how do you anticipate these factors shaping the future trajectory of silver prices? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.